I've just been asked by a few of you to make a more concise video, and you've asked me about rules to trade as well. First, I want to talk about just the basics of volume spread analysis, which is really just how to read supply and demand, and you can see the different phases via the volume. If you look down here, see how there's pulses where it goes high volume, low volume, high volume, low volume. It's like a wave. And you'll see that whenever it's low volume like this, it's an accumulation. The market doesn't really move anywhere, it's just an accumulation. And then when it trends, the volume will increase, and then it'll go into accumulation again, and the volume will increase, accumulation. So it's always doing this pulsing, and what we're looking for is the accumulation cycle is the most important. In order to take a trade, we're looking for a manipulation phase against that accumulation. So the way that the market makers work is they'll accumulate, which is just their way of forming a bias, and they're collecting contracts. And at the end of the accumulation phase, they'll have a look at their books and see what the bias is and which way they want to take the market, the most profitable for them. After the accumulation phase, they'll manipulate in the opposite direction in which the bias told them. So, for instance, here you've got low volume for this is a 4-hour chart, so for 12 hours is just accumulation. But you had, the way I would read it is there's a push in volume to the upside, which you think about how retail traders trade is they'll trade with the flow. So if they see the market going up, they'll start buying. And this is how they manipulate the beliefs. So the way I would interpret this is, okay, they're taking the market up, and therefore the bias which is being formed is going to be to the short side for the market makers, because whenever every contract that a retail trader buys, they're selling, so they're getting a sell contract, and therefore the bias formed will be to the sell side. And then it went into accumulation, and what I'd be looking for is a manipulation high, which is to get even more buyers in and to hit any stops. If we drill down, you'll see that they went down first, which is again to do the same thing, pull in sellers, and then they'll hit the stops of those sellers before they take it on the real swing. So what we're looking for as a rule, if you want to say, is we're looking for multiple bars of low volume. Sometimes it can just be one as a 4-hour accumulation, but we're looking for low volume as the accumulation phase, and then we want to look for the manipulation phase, which is the increase in volume. So as you see here, the increase is quite an increase in volume as they manipulate high. So if we put a vertical on that higher volume and we drill down to the hour, you can see here, if we keep going, putting the vertical bar on the highest volume, which is the peak right here, and as you see here on this volume indicator, they have the extreme tick volume, which just means a lot of activity on that bar, is colored white, and the white one is what they call the bearish volume, and the red one is the bullish volume. So all it means is this bar closed below 50%, and on the bullish volume it just means the bar closed above 50% of its bar. And if we keep drilling down, you can see there's the low volume, and then volume starts to increase. You kind of have two, if you look here, you kind of have two accumulation, manipulation, then accumulation, manipulation cycles. And on both cases, the end of the accumulation, the manipulation cycle ended in extreme volume. But if I put in my levels, let's see, the first, let's go down to the 15. We had a push to the upside and then a retracement back to beginning of wave 2, which is 2A, or 50 of that. We had accumulation, manipulation to the 50, and this is the kind of bread and butter trade for me. If I see it break 3A, and there isn't any real extreme volume, or if you do see extreme volume and it breaks through, there's not really, to me, this is, I'm going to be looking for a retracement back to the 50 or the 100, and then I'll trade at least 2B. Usually I put my take profit at 2B to be conservative, and that, you'll see this happen almost every week, some version of this. I'll go through a few examples of it, and as you can see here, it went into long accumulation, and then it went up to 2B, pin 2B on quite high volume. So the high volume is after I see an accumulation phase like this, is the signal for me to get in, and usually I take the trade on the 5 minute and sometimes even the 1 minute, but I don't always trade on the bar with the volume. I prefer to wait for the next bar or two to see a low volume bar. You can see this bar here, they kind of what's called a no demand. It's almost like an offering, are there any more buyers? And if there's no real volume there, you can see that there's no real professional buying. That would be my entry, this bar here. And you can see the same thing on the 1 minute too. Also, I like to see this green bar here. It's called high churn, and all it means is it's extreme volume within a very tight price spread. And then I usually see it's kind of like a failed test. So you see the green churn bar, and then you'll see a failed test up. Almost, it's just like another fake out, or to hit any stops, or to try and convince any more buyers that this is going to continue up. That's usually the turning point that I like to see. So I've marked out the past 3 weeks on the 4-hour chart, and let's just go through from a broader perspective what I just talked about, and how important it is to look at the 4-hour and 1-hour charts. You really want to step back and have a look at, okay, where was the last accumulation on the 4-hour chart, and what am I looking for, which way do I expect them to manipulate. So if we start back here, the beginning of the week is like the first 2 bars, very low volume, and that's what I'm calling the accumulation phase for the week, which is where the levels are projected from. And then we see volume increases as it goes up, and this is the manipulation phase. And we can see it went to 2B. And this is what you're going to see time and time again. Some form of at the beginning of the week, a false move, and then, so the false move is to induce buyers in this case, and then they'll take the market against those buyers, and they'll just manipulate around this initial accumulation phase for the week. And as you can see, they manipulated high to 2B, volume increased, and then they took the market all the way down to GM4A, 2B. And I just want to talk about targets. So if you take a trade at the manipulation phase, I think the best target to have to be safe, like if you want to be able to take the trade and walk away from your screen and just leave it and not have to sit there and watch it, and you are in the correct phase, like you've taken the trade in the correct direction after the manipulation phase or at the manipulation phase, then my target would be wherever the accumulation phase took place. As you can see here, we're looking at the 50. Then my take profit, I would put one wave from wherever the accumulation took place. And that would be, in this case, 2B. So if 50, 2B is the end of the second wave. That's on the square root. That would be my target. And, if you've taken a trade at the manipulation, at the high of the manipulation, it's always going to be enough pips. I'm not saying it's not going to go further, but that is a very safe take profit. And it's a very logical take profit. Okay, I'm going to take a trade one wave and then maybe see what happens. And if there's another wave, then you'll be able to, there should be an accumulation phase and another manipulation phase, and then you can take the trade again to the next wave. I think that's the best way of trading if you want to just be able to be sure, okay, it's going to at least go here. Anyway, so you've got another accumulation phase here, manipulation on high volume, increased volume, and then another swing upwards. And let's say this is where the accumulation phase happened, and I'd put take profit at one wave up, which from 2B, wherever this is the 50. So my take profit will be at the 50, which is a nice, still 80 pips. So if you've taken, remember, if you take the trade on the manipulation, you're getting more than one wave. You're putting a take profit one wave from where the accumulation happened. And as we can see again, it's gone into accumulation, manipulation high on very extreme volume. And as we can see again, what's happened, we've put our take profit at the 50, we're looking for another trade, we're looking for them to manipulate to the next wave or next level above, let's say, wherever the accumulation happens. When we're looking for the manipulation, we want to be looking for them to hit near the wave above. So let's say accumulation happens at the 50 here, or the 100. Let's say we're looking for a manipulation up to 3A, GM 3A. This is just a good rule to have. And as we can see, it went quite far down after this manipulation phase on quite extreme volume. And you can always tell, like, okay, in this case you can see that the volume wasn't very high compared to this bar here. I'd be expecting more than one wave. So from the accumulation, where the accumulation happened was 100 really, kind of between 150. One wave from there wouldn't really seem logical in accordance with how extreme this volume is. So in this case, I'd be looking to just use my judgment as the trade goes on. Okay, is this going to continue down? And it went all the way down to GM5A. See, this market seems to be resonating with the golden mean ratio more than the square root ratio. Okay, so the beginning of the next week we had similar thing. Accumulation, manipulation to the low. We had quite a big manipulation all the way down to 5A. Actually, let's see, what do we got here? Let's drill down. Actually, let's just drill down on that. So it looks like the manipulation was to the high, because that's quite a big move for me. That's not really a manipulation. Let's drill down to the 15. Yeah, the manipulation was high, like just high. You can see the high volume coming in. You got your green churn bar, then your little kind of failed test above that bar. That's not much of a manipulation phase, but you can see the volume. The volume tells you. I mean, I'd be looking, I'm always looking for, at the beginning of the week, my first target to be 2B. Seems to always make it to 2B, and then it'll accumulate for a little bit. In this case, it went all the way through to 3B. Let's go back to 4 hour. Then we had an accumulation phase and no real manipulation. It just kind of immediately went up. But we've got a very nice accumulation phase here, and as you can you can see on the 4 hour, which is rare for this to happen, you've got the green churn bar, and then this is what I mean in the extreme case here. The green churn bar and then the manipulation bar, 1 4 hour bar, went up to 3A on the other side, okay, and then come down. So you had your, again, you have your accumulation, manipulation, trade, and again, accumulation on the low volume, manipulation, increasing volume, trade. And the targets in this case, like, it really depends on how long the accumulation goes for, how extreme the volume is. Like if I see the first bar of the swing quite extreme volume and it keeps going, this is going to go more than the one wave, as we said, from the accumulation phase. My target would not be one wave there, and after a big move like that, you know, there's going to be quite a long accumulation, which we have here. But it's the same thing again, accumulation, and you got manipulation to the high. This is the next week anyway. But yeah, accumulation, manipulation to the high, trade. But even though you can see here, there wasn't really the characteristic accumulation like we have here, but you can tell by the volume that it is accumulation. And then they increased volume, manipulation, trade. Same thing again, accumulation, manipulation, trade. So this is the rule really. You're looking for the accumulation phase on the 4 hour, then the manipulation phase, you want it to be at or near the next wave down. So in this case, you know, you can kind of see, okay, it went a bit further, but really, if you look at the low of the accumulation, it was almost to the next level. And then you want your take profit to be one wave from where the accumulation happened, which was, you know, almost exact.